Good morning, everyone. Thank you for joining us on Morning Markets from True Potential. Today, I wanted to focus in on one of the decisions that President Biden's had to make over the past number of weeks, and that of who he was going to nominate as chair of the Federal Reserve. That's important because of how interest rates are determined globally, what it means for the dollar as the reserve currency, probably of the world, and how it feeds into policy that other central banks are thinking about enacting as well. So as we know, President Biden's had a lot on his plate to consider, from the infrastructure package, which has now been passed, but also through to the nomination of a new Fed chair. Really, it came down to two individuals that were being considered: the incumbent, Jerome Powell, and also Lael Brainard, one of the existing Federal Reserve governors. It offered an opportunity to potentially bring about change, but that would have been a radical departure from what we've seen from past presidents who tend to allow the existing or the incumbent chair to remain in place. The exception to that being the obvious Donald Trump, who removed Janet Yellen in favour of Jerome Powell. There is a political element to that as well. Powell is a Republican, so that certainly fitted well with President Trump's agenda at that point in time. But really what we've now got is a balance. So the nomination or the renomination of Powell as chair, but then Brainard coming in as vice chair. So we've got that political balance at the top of the Fed, a Republican and also a Democrat, both also with slightly different ideologies and how they think about regulation. So it'll be interesting just to observe how that plays out over coming months. It's important for the market because the market doesn't like change. A new Fed governor would have been a bit of an unknown, how they communicate, etc. So how did the market react yesterday? We saw interest rate expectations to continue to move up, so that's more evidence in terms of the expectation of rate changes. So the market pricing in a 75 basis point increase in US interest rates by the end of next year. The dollar was stronger, representing that interest rate difference, so stronger interest rates attract capital into the US. And we also saw it being much more focused in terms of the bond market at the shorter end of the curve, so that sort of 3 to 5 year maturity level. Just looking at that and putting some more context around that, thinking about the US dollar in particular, it's continued to strengthen over the past number of weeks, as we've been touching on. It's now back to the levels that we saw in September of last year. Really coming through against the euro, where we've seen ongoing euro weakness, a function of this interest rate differential that we've been discussing, but also what's happening in terms of COVID in Europe, where we are seeing a spike in cases with the potential that impacts economic growth looking forward. I think the other thing just to focus on from yesterday for us as consumers was we've started to see a little bit of weakness in the oil price. That's come down around 10% from where it peaked. That has been attributed to two factors really. One, the US thinking about releasing oil from the Strategic Petroleum Reserve ahead of the Thanksgiving holiday, and some speculation that a number of other countries might follow suit there as well. So we'll just report back on that as that evolves over the coming days as well. Looking to the day ahead, very much about purchasing managers' indices and what it means for Europe, given that weaker number that we saw in October. But join us again tomorrow and we'll discuss more around the PMI numbers. Many thanks.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.